In this video, I'm going to be going over a absolutely epic trade, the long that it took from here. I just held it up into this 15-minute high, but you can see it resulted in a beautiful run. It was the second stage of a market maker model. And you can see that with the consolidation down here, first stage and then second stage from here. And I talked through in my game plan, which I recorded at 1:09 a.m. EST. I talk through what I was seeing and what I expected, and then I can go and show you in detail how it actually played out. But it played out beautifully, exactly as I expected, which was pretty nice. Yeah, it was pretty clean and made a lot of sense. So I'm going to talk through that here in the recording of my game plan, and then I'll drop down to the charts. Where I did the recording, this is the 1 a.m. candle right here that wicks down. So it's just before we wicks down like this that I did this recording. So I'll play this now. So that's the game plan for Thursday, the 6th of November. Looking at gold currently and beginning to look like we may be getting second stage in this buy program. So starting off on the hourly chart, I mentioned earlier this week that I was actually bullish and looking to buy down below that original consolidation from last Thursday. And price dropped into that area very aggressively after having consolidated above it for quite a while. And I was no longer comfortable taking that trade. It looked incredibly bearish at the time and still does. So I actually took out this order, so it's no longer in. But we basically wicks down deep into that range, within where I had my stop though, worked straight back up and then came back down with an ultra deep retrace into the close. So all the way down into 4 p.m, closing essentially just a few points above that long hourly wick that made the low. So an incredibly deep retrace, closing well below the midpoint of that 4-hour and the 1-hour wick. And then eventually 1800 consolidated sideways, and then 2100 rips back up. And since then has been showing bullishness. Now, obviously that's a manipulation closure on the 4-hour time frame and resulted in a push up. That manipulation closure coincides with the facts that we had those relatively equal lows that we left with that New York low at 9 a.m. and then the 1900 low. So that makes it a really obvious original consolidation. Now, with it being an original consolidation, I'm looking for the rest of the market maker model to play out. And after that comes first stage, obviously. So first stage, you're looking for an intermediate term low. We get that after putting in a short term low after hitting a 1-hour impulse high. We then make a new high and then make a new low. And that becomes our intermediate term low. We climb back out that range and break that high. That means first stage has played out. So that's at 1100 yesterday. And we then consolidated up to the highs bunch. And then I'm looking for a retrace. And then for that to be second stage from there onwards. We retraced relatively deep into that range. We didn't take out the short term low to the right of the intermediate term low, but we came super close to doing it, basically left relatively lows down there, and took a deep discount impulse low. So that on the 15-minute chart, I believe, there was a super deep discount impulse low. We just tapped that and fell like a few ticks short of VRL, being that short-term low at 10 a.m, and then rallied from there. So that is actually kind of us leaving relatively lows on the 4-hour chart as well. So just keeping in mind that we are leaving behind smooth lows, but I really like the idea of this being second stage because we have very clear original consolidation. We have a clear first stage, and then after that retracement, we then have been climbing since 2000 made that low, and then we climbed up to the highs. We have tapped the highs, and now I'm just looking for that push up. Because the second stage, there should be very minimal retrace before pushing us higher. So I'm expecting us to continue just pressing into those highs. Very obvious targets above us, including a 15-minute impulse high and 4-hour impulse high as well, relatively equal highs. Heaps of buys up there. We have smooth highs that we already enticed away from earlier. And yeah, so basically I'm looking for a very aggressive rip into those highs. And that should happen from fairly high up in the range. So my points of interest are all within the range that we created on the 2200 candle. We've been consolidating pretty much inside of that range ever since. The low time frames, it does look quite ugly, but it's because of the market maker framework and my expectation regarding that, I'm quite confident that we should be able to get a nice push from here. And yeah, there are a few other signatures that suggest this is the case, including long wick plus gap signature, which is 2000 on the hourly time frame, creates an epic Morningstar kind of play where it creates a huge wick that's rated sell side, and then we just displaced past that, failing to trade into that wick. It indicates strength, which is what you want to see with second stage. So I would trust that fair value gap should remain open, and that's essentially the 2200 low, and that's where my stop loss is currently for the limit entry that I have in price. So I'm going to walk through my reasoning behind where I do have my limit buys. That's the first thing to mention, is that I'm expecting speed, I'm expecting distance, I'm expecting second stage, and we have that long wick plus gap signature. So a deep retracement isn't necessary. Now that 2200 low if we could drop down to the 15-minute time frame, we created a long wick at 2130, and then immediately after that long wick, we overlapped it and went straight back up. But then the next candle, so long wick, next candle, it starts running back up, and the next candle following that at 2200 wicks down, takes out that previous 15-minute candle low, and then rallies straight back up. So another kind of morning star looking play. So that becomes a really nice order block, even a propulsion block that I'd expect to hold. And beyond that, we then hit the high, created a short-term low at 2300, and have since then been consolidating within that range, barcode on the 15-minute. So what I want to see is us drop down below those lows, get a nice reaction back inside the range. I'm going to actually buy on the soup with a stop loss below that 2200 Morningstar kind of low that wicks down on the 15-minute chart, and trust that we should push up from there. But yeah, the lower on the time frames I go, the more disorientating it looks. But I do believe that would be a good play. If it does want to continue pushing lower than the 2200 candle, then I don't think it would actually be quite what I'm after, because if we look at the 4-hour time frame, that would mean that the 4-hour flip's completely bearish, which sure, that could be the case, but then it's not as strong as I anticipated, and it could come for as much of a retrace as I wanted. So yeah, so I'm quite happy with the area that I'm looking to buy it because I'm looking for that strength. But I will be watching on my personal account as we drop into that range. I've got 2 points of interest which I want to buy it. However, I'm going to watch price carefully and look for basically the momentum to slow down so that I can get the best fill I can. That's the main plan. But I really like the fact that we have all these enticing rallies on the 5-minute charts, kind of big green candles within this consolidation and long wicks below us as well. And we're now running over all that stuff. So there's going to be a significant amount of sell side below. We have that 2300 low. Just below that, there's another impulse low on the 1-minute chart time frame. You can see that. So that's where I'm actually getting in on part of my position. And then beyond that, we even have a few more nice swing lows below that. Stop loss is going very rigidly below the 2200 candle. That 2200 candle low is actually sitting right at the new day opening gap. So that is interesting. I don't think that's a reason for me to actually widen the stop or anything, but I'm definitely not going to narrow my stop loss thinking that, if it comes down this far, then it's probably going to take out the low, because that's not how it works. Gold, it can come down, make perfect equal lows, and then go the other way. So making sure that is in the actual invalidation for this trade idea. And if it does take out that low and then get a reaction, then that is new information and potentially could find a get back in on the backside of the trade on the way back up if it is bullish. But yeah, priority is just executing this correctly, and part of executing it correctly means holding for the targets. I always like to take a partial at premium internal range, which if I have 3 on, I might do 3 different lot sizes, 0.01s. But beyond that, the M15 impulse high is an incredibly obvious high probability target, which is a nice distance away from price. It would be a real shame not to hold for that. And then beyond that, the 4-hour impulse high as well. So definitely want to be taking off at least 2/3 of it above that M15 impulse high, and that should be very rigid. The final position, maybe I can use my intuition to get that off and see how I do with that. But yeah, the only thing that stands out to me now, on the 5-minute time frame, you could argue that this looks like a bull flag, because we have that 2200 low that rallies, and then we just start consolidating sideways. There are no swing lows on the 5-minute time frame. So yeah, it just gives me more reason to monitor what the price does as we drop down into these lows, and then see how we go from there. It is currently looking quite bearish, despite the fact we're consolidating. It looks like it wants to take out these lows. I don't know if it's worth catching a scalp down, but definitely looks like it could have a nice melt. But yeah, with how price is moving, I think it's going to be important to just try and get that good fill, and which will mean marketing in rather than setting limits at the first short-term low. So anticipating that we're likely to go a little bit further and then looking for that rip back up. However, part of the reason why I did put my limits fairly high in the range is actually because of the fact that I'm expecting second stage, which means that we could just get an IOFD, and we are below the 2300 candle, which could constitute that IOFD, institutional order flow entry drill. I'll just monitor price as it drops in. As far as NASDAQ goes, NASDAQ looks, I'm bullish because they've got those. So that was the game plan that you just heard, and I tried to indicate what I was pointing at on the right, as you probably saw, but I will now just show executions and then show in a bit of detail on the charts what actually ended up happening. I can get rid of this window now. So as far as executions go, this is on my challenge account. Very nice trade. That's approximately 2.5 R that I made out of it, which for the move that has occurred, I could have probably done a bit better. That's all good. I am still profitable on the day. However, NASDAQ, it took a bunch of losses, which probably took me down a significant amount. Still green in the day, but yeah, this was definitely the trade of the day for me. So as far as executions go, as you can see, I'll grab out this. Let's see if I can zoom in a bit actually. So getting long as we dropped down into this range. Don't know if I can easily scroll. Not really, but yeah, I did 2 different entry points, both with 2 positions each. So you can see 5 here. The top 4 were the ones I put on. 2 entry there, 2 slightly lower. And then as we traded up, I took 0.2 off at this area here. So not quite a full position. And then the rest up here. So out of my full position, I had taken off 25% internally. And this one definitely was probably a bit early, but just got such a nice reaction. I thought, wow, it'd be such a shame to let that come all the way back. So I took off 0.02 out of my 0.12 total size. and then the final 0.01 from that first 25% took off up here. So at this point, I've still got 75% of the position on as we are hitting ERL. It's really hard to navigate MT5. And yeah, so those fills, and then took the last one up there. Then as we hit these highs, it was very extended. We just had this rip from here up to here very fast. And although I was planning on holding majority up to that M15 high, which is up here, because we were so extended and above buy side, I figured, okay, it'd be a great place just to take a bit more off. And I was going to add back on if we had dropped down into the high end of this range below this impulse low, which we didn't quite do. So yeah, so I don't think there's anything wrong with taking this off up here, just because we were very extended. So it was very reasonable. And as you can see, we did get a significant drop back down straight afterwards. But taking that off there allowed me to keep my stops in place and look for that run higher. And as we got this pump up into the highs, taking the size off as we came up into it, and then did a full closure up here. So played out quite nicely. As you can see, we actually dropped down beautifully below that impulse low. And as we tapped that and reacted out, I was thinking, oh, it'd be great to add up here, but then I ended up, as you can see, just taking something off instead, which isn't ideal. Something I think I talked to later on in this was the facts. No, I already talked about it actually. The fact that it looked like a bull flag, and that was possibly the reason why I actually changed my mind. Or didn't change my mind, but like as soon as we got this really nice reaction, I still kind of was second guessing it. I was like, oh, I don't really trust it. Maybe it's just going to do it and then come straight back down and overlap all this range. But you can see it played out beautifully. So I'll do a quick top down, just talking through what I was looking at. Unfortunately, I did bitch out of this long. Essentially, I was looking for a long from this area. This is a previous area of accumulation with a original consolidation just above it. And then we drop down into that range. Beautiful place for reaccumulation before running high. And I'm anticipating this high to be the target up here at 4,050. But when I saw this long wick and then just rolling over with this very bearish looking closure, that told me that, okay, it's not looking like the trade I thought it was. And we have these almost relative equal lows down here. This is only a few ticks below. And so I figured that, well, I'm not going to take that as loss. And I was actually quite happy that I was able to get rid of the position. I actually made a video saying that, well, it changed. It was no longer looking how I expected it to. And so I got out of it. And it did end up ripping, but as you can see, this is leaving clear relative equal lows. But that was a good thing because that is what, well, as I mentioned in the game plan, that's what I saw today and what allowed me to take the long. This told me it was an original consolidation because we had relative equal lows, as well as the facts that this both the 1 hour and the 4 hour closed below the midpoint of the wick and then rejected straight back up. That is a manipulation closure, and a lot of the time that indicates that we will reverse in the other direction for one, and that it's a consolidation, an original consolidation, meaning that we'll have a market maker model framework following. Market maker model, if you don't already know, you probably do, but you have a consolidation of some sort, and then you break out the consolidation. You could retest, you could not, but then you're looking for a intermediate term low. To the right of that be a short-term low, and then you're looking for second stage, and second stage will a lot of the time be very shallow retracement and then aggressive move. And this was the area I saw, which is right here. And what made this especially powerful is that this was actually second stage of second stage. So if you think of this right here, you have consolidation, first stage with an intermediate term low, and then a short-term low, breaks the high, and then you're looking for second stage. Within this retracement, you have a fractal, and the fractal is going to be consolidation, first stage, second stage, SMR, first stage, and then I was looking for second stage here. And this is where we were sitting, and I was thinking, okay, this looks like we're going to get second stage of this model because we've just had first stage here. We have, I'm expecting second stage for this fractal within second stage of this high time frame fractal. And that's how you get these really, really big extended moves. That doesn't happen super often. I probably recognize this in the charts like once a fortnight, maybe in gold, if that. But when it does happen, and if I'm able to recognize it, like it's such a high probability for a beautiful move. And the key is that this is always going to be super, super shallow. So if you've got a fair value gap here, it shouldn't go deep into it. For second stage, it should be very shallow. If there's a propulsion block or any kind of PD arrays or reason that price should not go very deep, you want to trust that it is going to be quite shallow and get a very aggressive extended move. And then obviously, if you're looking at a low time frame, hold up. If you're looking at a low time frame and you're looking at this model here, you're not going to expect such a big move. But if you have the context of the high time frame, you're like, okay, well, we're actually in the second stage of this market maker model. And within that second stage, that is where I'm entering on this second stage. And that's why this resulted in such a beautiful move up into these highs, tapping this beautiful impulse high. Also a bit of a delirium framework. You've got relative equal highs with an impulse high above, and that's why we see this beautiful run up. And yeah, so that is essentially what I saw here. This really stood out to me. This is one of the main things that got me looking for this, is just the very obvious consolidation, which I saw because of the manipulation closure below the midpoint of this wick on the hourly and 4-hour. Relative equal lows left behind as well, and then a rally away. That is a clear consolidation. Then we break the high above this short-term high, engineer a short-term low, break the high again, make an intermediate-term low, raiding out that liquidity. That low is now the intermediate-term low for first stage, which is confirmed as we break this high. We've now had first stage of the model play out right at that point. Looking for second stage. Initially, it makes a bit of a deep retracement. But it hits this discount sell side. It fails to take out the short-term low within the first stage, and then gets this nice push up, and then starts leaving the signature. So this signature right here is a long wick. Usually you'd expect us to trade down to the midpoint or so, but when we fail to do so, and then that is followed with a fair value gap, as you can see here, that indicates strength and results, and that's exactly the kind of signature you want to see when you're anticipating second stage of a market maker model, because second stage always has speed, strength, all those things are synonymous with second stage. So seeing these key signatures such as that is exactly what you want to see. You also want to see other signatures such as institutional order flow entry drill, so partial entries into fair value gaps. You want to see order blocks hold price really strongly at the open and us not trade deep into them. And if we drop down to low time frames, you'll begin to see some of those signatures play out. But yeah, even on the 15 minutes, failing to trade into that wick and then ripping higher. I'll get rid of all these lines real quick, but you can see as well just here. I'll get rid of that. But this 15 minutes charts, we have 21:30 create a really long wick, and then the very next candle starts ripping and then closes quite bullish, and then 2200 new 4-hour candle aggressively drops down, wicks out that previous M15 candle low, and then rallies straight back up, closing green. That is a very clear sweep of a low and very strong rejection, and so that's why I mentioned that I'd be looking for a potential propulsion block in here, because propulsion block is one of the PD arrays that is very sensitive, and that's the kind of thing that works perfectly within this context of a fast moving market, so second stage. So you can see that opening price, that is the order block or the propulsion block, and we drop into that. Beautiful reaction from there. This is the 1-hour candle low, you can see on the right. The 2300, sorry, this is the wrong time frame. No, it's the right time frame. So this is the 2300 candle low. We then have midnight open up just here, consolidate sideways. And if we drop down to the 5 minutes, you'll see kind of how that looks as well. Clearly enticing long. So we have these large up closing ranges, big green ranges, long wicks to the downside. Both things that classic trading patterns will teach that are bullish rejections. So big, strong bullish pushes, enticing longs. Long 5 minute wicks. It looks like a bullish rejection in quotation marks, and traders will be looking to put their stops below these lows. Not just below those lows, but they'll put them a little bit further at some obvious swing low. Only on the 1 minute we have those swing lows, not on the 5. However, that is kind of what threw me off a little bit. I would have much preferred if we had a swing low on the 5 minute chart, but you can see that we just dropped down nicely below this swing low right there. Got a beautiful reaction and a push back out. And I'll drop to the 1 minute just to finish showing this off, and then we will be done. 1 minute charts, absolute consolidation, very ugly for anyone trying to trade this. But then eventually, after going sideways a whole bunch, we get at 142, this closure all the way down here. That then gets followed through at 44. Then 145, new 15-minute candle opens, small range, aggressive drop down, taps beautifully into this most discount short-term low, and then gets a very aggressive reaction at 147, straight back out. We hit this high, work above, and then the next candle, looks down, closes back up there, and then we start pushing up. But it was just a very fast reaction out of this area, and then just absolutely obliterates all these highs. I was kind of hoping, as I mentioned, that we'd trade back below this short-term low so I could buy again and catch another rip up. But it had already done the work here. We'd already been consolidating below these graphical highs for a long time. We'd taken the sell side we needed, and it was just ready to go. So it gets this beautiful break high. This could have actually been a buying opportunity even. There's something I need to work on. And just understanding when certain candle closures, such as this hourly closure after this aggressive rally, this is an hourly last second wick, if you think about it, and the final 12 minutes or 13 minutes of the hourly candle, it has this really aggressive rally that a lot of the time is a real rejection when the rejection happens in the final portion of the candle, and then that results in a continuation high. And yeah, and this could have also potentially been a long up here as well. We have a lot of consolidation just going sideways, creating a nice balanced price range. And any traders seeing this big rally, everyone likes to fade price generally. So anyone trying to go short, we then get to this nice big push up. They're now trapped underwater. A little bit of hope for them as we begin to just slowly fade down a bit. But then we get this nice new 15-minute candle open, and we get a really aggressive push away from that above these highs right at 220. So that's more a momentum scalping kind of strategy, which I'd like to develop some more entry techniques around, with so tight entries, tight stops, catching these kinds of moves. But for now, that I'm just really stoked that I was able to identify this real time, a game plan for it, and trade it relatively well. I think taking this initial little scalp here wasn't necessarily a bad thing, because with goals, like a lot of the time, let's say this was bearish and was actually going to tank, and we get this sharp reaction. A lot of the time, that would happen even if we were going to sell off. But although more often than not in this kind of situation, it would just continue melting. But it's a fine balance of being profitable, like even when you're wrong, versus being confident in a trade and being happy with taking a full stop out because the probabilities are that the trade will actually work out. But in general, I think I traded all right, and yeah, just stoked with identifying this consolidation, first stage, second stage of second stage. So that's the smart money reversal. And if we drop down, and once again, I'll just show. So this first stage finishes when we hit this high right there. We're then looking for second stage. Second stage has a fairly deep retracement, smart money reversal, low risk buy. We're then looking for first stage. First stage occurs right here where we have a short-term low, intermediate term low, short-term low. Then we're looking for second stage of second stage up here. So there's our intermediate term low for first stage. And then second stage in this area and get that nice rip. So hopefully you were able to follow with what I was talking about and can kind of recognize that market maker framework within this price section.